Brian, Chinese company DeepSeek says it has a new AI model that is much cheaper and just as efficient as others, including ChatGPT. Give us an idea of some of the numbers behind what this company is spending compared with the massive CapEx spending that we're seeing out of Silicon Valley giants just last week.
Yeah, Lisa, thank you so much. That's the real, I think, disruption for the markets today is not just cheaper, but a heck of a lot cheaper, 96% cheaper than what we're finding from the current spend in alternate models like ChatGPT and Gemini. So that is, something that is equivalent of, $5 million spent on the DeepSeek product, but it's 100 billion on the other side of the coin with some of these other products that are available. That's what's disrupting markets right now and why we see such a big impact on things like Nvidia. Do I really need these super high functioning, but also very expensive chips and components in my network to make this same compute power happen? Now, what DeepSeek has said is that they're able to accomplish this by using 75% less memory. Traditional AI is using 32 decimal points beyond in their computation speed in order to make sure that they're learning very deep trends and can learn from itself in future models. DeepSeek said, hey, we're going to cut that down to just 8 decimal points and let it, move more broadly through the data in an all-encompassing fashion versus the linear thinking models that are in traditional AI today. That's really the big disruption in terms of the speed, but also the more efficient compute power that DeepSeek says that they can achieve in their modeling right now. And of course, it's more efficient means cheaper. And at this point, again, 96% cheaper. That's where we have this huge question mark that comes out and says, hey, do we really need to expand the power grid to feed all these data centers? Or can we basically run this off of the current grid that we have using this new information from DeepSeek? We don't know. We'll have to find that out.
Okay, fair enough. That's a huge difference. But we are still pretty early on in this AI storyline, right? So, in that regard, does this really upend all the thinking about NVIDIA's chips and US dominance in the space? Because NVIDIA shares were down at least 17% at various points today.
Well, it's in the near term, it seems to be very disruptive just because of the shock wave of cost differential. However, in the long term, this is going to have to be proven out. Now, DeepSeek says that this source code is open, meaning anybody can use it and hopefully replicate the success. If that's true, then we might to see long-term cost structures get moved. But at the moment, it's really just kind of a shock of innovation at this point. And that brings a little bit of fear. Anytime we see a big change in innovation, that brings disruption to the marketplace. And at the moment, we have a disruptive nature that's putting fear into investors. Now, that's all happening in the very short term. In the long term, this has to be confirmed. It has to be replicated by other testers that say that, yes, this does what they actually say it's going to do. And in that process, we'll kind of find out where DeepSeek started. I mean, obviously, there's been an enormous amount of capital already spent in building these AI models. At what point did they join the fray? In other words, this technology might be standing on the shoulders of giants, and we'll have to look at where they are. They didn't just come out of thin air. We know China is not exactly the best partner when it comes to being, sensitive to or protective of intellectual property. Where did the source come from? Where did the idea come from? Where does it overlap with what we're doing currently? It doesn't necessarily mean that NVIDIA has lost its edge or that nobody's going to need to use NVIDIA chips. We do need to see if this is actually a workable model and where it might fit in practical applications.
Well, in the short term, we do have earnings from major tech companies, including Microsoft and Meta, coming out in the next days and weeks. So, does this mean then that perhaps their shares will be punished for this mammoth spending in AI, and that now companies will be rewarded in the short term if they actually show that they can spend less on AI?
Well, I really do think that's going to be a critical part of the guidance portion of those earnings calls later this week. Look, 20 years ago, we all remember that AOL was the largest internet company in the world, and they were very slow to pivot and adapt to what the new broadband landscape looked like, and they eventually got punished to the point where they're no longer in business. I don't necessarily see that type of a landscape for these players, but it's a cautionary tale. If you've got this much capital invested in this particular project, it it has to be monetized at some point. When can you show us profitability for your capital commitments? And it doesn't necessarily have to be just from AI chatbots. If you are one of the companies that participates in the development of the modular nuclear reactors, the smaller, more compact versions that can even be portable to a certain extent, Microsoft has been kicking around this idea, Bill Gates privately through his foundation as well. There are lots of ways that you can actually monetize these projects, but we're going to need to hear a much shorter road to that profitability than I think the market was giving them credit for in years past. This definitely shortens the timetable to say, hey, we got to be a lot more competitive. We need to monetize our investments, and we want to show profitability back to our shareholders.
Interestingly, with all these big tech stocks getting punished today, shares of Apple are actually up. Why is that?
Well, it's kind of an interesting reversal for investors. Over the last year, they've been very upset with Apple because they've been very slow to invest in AI. In typical Apple fashion, maintaining their vertical integration strategy, they've decided to take AI in-house. They're building their own chips and they're building their own bot so that it functions vertically across all of their product lines, from your watch all the way up to your MacBook. And that is something that has insulated them from sinking too much capital too quickly. But also because they're doing it in-house, they haven't necessarily had to publicly disclose that same road to profitability. I think they have an opportunity here this week to be able to show the world where they are now in the AI space because they don't have as much sunk capital. It might be a quantum leap forward for them as they kind of bend that cost curve back in their favor because they didn't sink the capex on their balance sheet. Now they might be able to say, hey, look, we waited long enough. Now everything's cheaper and we're going to be miles ahead in terms of that profitability picture compared to some of our competitors with so many large commitments at this point in time.